Welcome to TradeTheNBA.com. This is John. This report is for the 14th of February, and, well, happy St. Valentine's Day, and hopefully everyone remembers someone special on the day. The market has been performing especially nice on such a special occasion. We would expect everyone to be feeling rosy and happy. We've been above the 735. We hit the 762, a little bit of resistance right there at that previous point as we approach breaking into that 2800 range again, defying all logic according to some, despite the fact that growing economy, blah 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 blah, just ignore all that and tell everyone that the market is headed lower, which it may, at some point, actually do that in a more significant way, much like we saw this impending breakdown right here. The fact that we've moved right back to the same 0 point for DOC red becomes critical that it continues to rise, and we're right now seeing a nice little bounce in orange with steel crossing below cyan. So other than the green crossing below red, you have almost all the signals for a secondary short. If that happens before we get new highs on the shakeout, that actually could be problematic because you'd have higher highs on lower shakeout reading. It could be problematic. The reality is we have positive extreme from the other day on a daily standpoint, just meaning that the lows have to be revisited on that setup. Nothing starkly crazy. Interesting part about the NASDAQ move is that even though we're getting close to the highs there, you get another move of gold rising again. So could be another leg of that up move. Certainly aren't going to be shorting into the rising gold, because if you do, you could end up being exactly what most of this is short covering, and then you're like stuck, which is what happens when you go against what the readings are. The euro, well, let's see again, just like we talked about. Had the dip below the red line, and what did it do? It retraced back to those lows, now matching those lows on a slightly higher extreme. Should be helpful. Of course, it's still wheeling from that little bit of decay, though not below negative 13.5, so certainly hasn't exacerbated the extreme low. And gold making a reset here from the shakeout standpoint. That could give a little bit of a bid to it going back from there. It was a fairly straightforward day. We're in the continuation mode of that big long. We had some simple DOC spreads, but every one of them had significant resets of steel coming from lower, which we know often give us exactly this kind of setup where you reach the 50, bounce to new highs, get a whole series of new positive extremes, which give you a low retrace to right about here, which was at the 53.50 range, and then you come over here and you make 53.50 exactly for the low, filling the positive extreme at the same time from your DOC spread. You're getting the steel crossing, and then boom, steel crossing red, then orange, and steel over cyan to finalize the turnaround, usually just right around where that is. It doesn't make this a bad short. It just means that whether you're going to make it to the 50, in this particular case, having the positive extreme meant to me the 61% best spot at that point. Again, excuse me, little DOC spread set up right here. At the same time, you have green crossing below red. Cyan moves above green and steel at the same time, and orange had already crossed. So, hey, just a couple of bars, and then boom, breakdown city all the way to the previous dip point here. Just make those new lows. And we kind of evened out on higher shakeout. P2 setup was perfect there. That gets bought back up. We end up with positive extreme right up at the peak. And again, everything starts crossing all at once, and then boom. And all it did was just fill it in there. And that was just to clear some stops so that people didn't get carried away. And what do they do in pre-market? Bring it right back up. So just to stifle anyone who's trying to be too creative with their stops, you're going to have to just live with the fact that you're going to have a gyration if you're long, and if you're short, well, you better look for those peaks and troughs to get out so that you can navigate the ever increasingly higher market. As we pointed out the other day, the daily had taken its gains off that Iron Hawk signal and continuing to make new equity highs. So all in all, this was a pretty clean, straightforward day. The 50K was a little more interesting because advance it all the way to the current chart, but it started to make some softening signals, but you get the sign under red the whole way through here. The only time it had a peak move was right about there where the steel went above, but you had no cross of red or orange above anything. And then as we're getting into it right here, you also have an additional rejection to the upside for the 50K from a DSC standpoint, and all you've done is reset a little bit of the shakeout, giving it more plausibility to make a new high. So there you have it. Long and the short of it, and mostly long. So go figure. As always, though, you guys have a great time. Not really a holiday per se, except for, the romantic connotations of the date. Anyway, I'll be taking my little girls out for a nice, lovely evening, so I don't know that I'll be around for much of the market action, given that it's much later here than it is for you guys. But as always, if something significant pops up, I will put the chart on the Skype chat, and we'll go from there. Trade well. Talk to you later.